Hey, it's Camilla Stevenson, and around here we talk wealth. Today I want to break down something that every crypto investor thinks they understand, but most people get completely wrong. Here is the truth that I want to reveal. Most people don't lose money in crypto because they pick the wrong coin. They lose money because they follow the wrong emotions. Every single cycle, the same pattern repeats. Retail buys at the top, retail sales at the bottom. The headlines manipulate the crowd and institutional money positions quietly, while retail is panicking. And if you don't understand what I'm about to show you, you're going to end up doing the exact same thing without even realizing it. But once you do understand it, you're going to stop giving your hard-earned money away to fear, greed, and manipulation, and you'll finally start building wealth like a strategist instead of a spectator. So today I'm going to break down why retail always loses money and how the media plays into it, and also how wealthy investors position before the crowd even notices. Now, before I go forward, I do want to say that this is not financial advice. I'm not telling you what to buy, hold a sale. I am just giving you this off of educational purposes only. I am telling you what I would do. Go speak to your financial advisor if you want some more personal instruction on your finances. Again, this is for educational purposes only. Please hit the like button and subscribe if you have not already so that you do not miss a video. I will continue to give you information that keeps you grounded and helps you think independently. And I want to give you real clarity. Okay, so again, hit that like button for me. Now let's start with the emotional blueprint that wipes out retail investors every single time. Most people think that they're making logical decisions. They are not. They're making emotional decisions, and they're using logic to justify those emotions. And here's how the pattern goes. Number one, the market starts going up and retail gets very curious. They're watching from the sidelines. They're thinking, wow, maybe I should get into this. And then two, the market goes higher and then retail finally feels safe. So this is where most people enter, and it's at the top when smart money is already preparing to exit. And then three, the top forms, then headlines, they get loud and bullish. And the reason why is because institutions need buyers to exit into. So the news starts pushing excitement, and that's your exit liquidity. Then number four, the market turns and then retail gets confused. They don't understand the drawdowns and they don't understand cycles, and their nervous system interprets a dip as dangerous. And so then five, the market drops and then retail panic sells, not because of logic, but because fear hijacked their decision making. And then six, the bottom forms. Headlines turn negative and scary right when prices are cheap. The media tells people it's too risky. So again, they're selling at the bottom. And then seven, smart money accumulates. So retail disengages. Retail loses interest, and smart money loads up quietly off exchange. Then eight, market recovers, retail re-enters too late, and the cycle begins again. Listen here. This is not an intelligence problem. It is a nervous system problem. Fear and greed are the two wealth killers that most people never master. And until you learn to break this emotional cycle, you're going to keep repeating it in every market, whether it's stocks, crypto, real estate, everything. So you have to understand that headlines are there to manipulate retail. Retail investors don't just lose money because of their emotions. They lose money because their emotions are being triggered on purpose. Mainstream media is not designed to make you wealthy. It's designed to move the crowd. And the proof is in the timing. Let me show you the pattern. First of all, bullish headlines always show up near the top. When prices are already extended, when smart money is already positioned, and when institutional players need liquidity to exit, that's when all of a sudden you're going to suddenly see crypto is the future. Major bank partners with blockchain, Bitcoin headed to 100,000. This altcoin could explode. Why? Because headlines create excitement. Excitement creates buyers, and buyers create exit liquidity. Professionals are selling to people chasing those headlines. Then next you have the bearish headlines. They're always going to show up at the bottom. When prices are low, when fear is high, when the market is exhausted, when retail has capitulated, that's when all of a sudden you're going to see crypto is dead. This could be the end of Bitcoin. Regulation could destroy the market. Investors flee crypto in panic. Why? Because fear creates sellers. Sellers create entry liquidity. This is when smart money loads up quietly over the counter in dark pools while retail is too scared to touch the market. Then next you have the fact that headlines do not predict price. They reflect sentiment. By the time the headline hits your screen, the move has already happened. Professionals were positioning months before the news cycle caught up. Retail waits for confirmation, but confirmation is just the media validating a move that has already passed. Let me say that again. If your convictions comes from headlines, you are already late. Then you have the fact that media runs a business model, not a financial education platform. This is what most people forget. Media outlets make money from ad clicks, attention, fear, hype, outrage, emotional reactions. They are not studying charts. They're not analyzing macro. They're not managing portfolios. They are shaping behavior. And when people don't understand this, they end up buying on the top and selling on the bottom every single cycle. Also, you must understand that headlines are not signals. They are traps. So here's what I need you to get. Bullish headlines equals smart money exiting. Bearish headlines equals smart money entering. CNBC is not your signal. Twitter is not your signal. Fear-based narratives are not your signal. Hype is not your signal. Your education, your strategy, your conviction, that is your signal, because the day you stop reacting to headlines is the day you stop giving away your wealth. And also, if you want to go further in your education of this, make sure you visit the links in the description below. StockUp University is still running a discount for you. Use the code EARN in the description below if you want to understand how these markets run. It is the most simple, clear, incredible, brilliant program that can educate you about the markets and give you financial literacy to build generational wealth. The link is in the description. Now let's talk about something that goes even deeper than headlines or charts. Because the real reason retail loses money isn't just media or manipulation, it's biology. And I have to stress this a little bit more because people don't understand how the human makeup is wired. Most people think when they're investing in something, they are being rational and logical when they invest in certain assets like crypto. They're not. They are making decisions from the nervous system, and the nervous system is built to avoid danger, not to build wealth. So let me show you exactly how this works. First of all, your brain interprets price movement as physical danger. So when a market dips sharply, your brain doesn't say, oh, this is a healthy correction. Your brain says, we're under threat, get out. Your heart rate rises, your chest tightens, your mind starts racing, your breathing changes, your logic shuts off. This is survival mode. This is what makes people sell at the bottom. And survival mode does not build wealth. It protects the present moment. Then also you have to understand that fear feels like wisdom in the moment. Most people don't get this. Fear disguises itself as logic. So when the price drops, you hear thoughts like, maybe this project isn't good at all. I should take what I have and leave. I knew it wouldn't work. These aren't strategic thoughts. These are fear narratives coming from your nervous system trying to feel safe. Fear makes you think you're being smart when you're actually sabotaging your future. Then you must understand that greed also feels like logic, but at the top. So when prices rise, dopamine increases, confidence spike. You feel like you're missing out. Your body gives you this false sense of certainty. So you tell yourself, okay, now it's safe. Everybody's talking about it. It must be the right one. Let me get in before it goes higher. But these thoughts are not strategy. They're greed impulses disguised as good timing. One thing you must understand is your biology is designed for short-term survival, not long-term wealth. Your nervous system reacts to sudden drops being danger or sudden pumps being safety. But wealth is built in the opposite direction. It's built by buying fear, holding through boredom, accumulating during uncertainty, selling strength, not weakness, thinking in years, not minutes. This is why retail struggle, because your natural instincts are perfectly designed to make you do the wrong thing at the wrong time unless you have education and awareness to override those instincts. And I need you to understand something. Until you master your emotions, you cannot master the market. The market does not reward emotion and impulsiveness and fear reactions and excitement and hype and hope. It rewards discipline, patience, objectivity, long-term thinking, emotional regulation. Listen, you don't need more charts. You don't need more hype. You don't need more predictions. You need mastery over the part of you that is making decisions from panic instead of purpose. When you calm down your nervous system, you can calm down your portfolio. Now, this is how smart money actually buys, and it's the exact opposite strategy. So now that we've talked about emotions and biology, let's talk about the people who consistently win in these markets, because smart money or institutional money, like I said, they do the exact opposite, and they do it with zero emotion. Let me show you the blueprint. Number one, smart money positions before the headlines, not after. So by the time CNBC and all of these other outlets is bullish, by the time everybody's excited, by the time influencers are screaming, we going to the moon and all of that, smart money is already in or already out. They don't wait for confirmation or hype or all this reassurance. They buy when the narrative is quiet and they sell when the narrative is loud. That one shift alone would change your entire wealth trajectory. Number two, smart money accumulates during fear, boredom, and silence. Retail only buys when the crowd is excited, but smart money buys when ain't nobody paying attention. The chart is boring, maybe they're dipping, sentiment is low, social media is quiet, or they're very negative. Headlines are negative. Retail has mentally checked out at this point. And this is why I love accumulation zones, because retail won't touch a project when it's uninteresting. But that's exactly where the wealth is built. And then number three, smart money sells into euphoria, not fear. Retail sales when they panic. And that's why a lot of people are selling right now. But smart money sells when retail thinks nothing can go wrong. They offload bags at the peak headlines, the viral moments, the emotional highs, the this time is different energy, the everybody buying wave, because they understand human behavior. They know the crowd will show up late and they wait for that liquidity. And then also realize the fourth thing is that smart money has a thesis before they buy. Retail buys on hype first and tries to build conviction later. Smart money research, study, track macro conditions, understand utility, evaluates risk, builds a plan. They don't get shaken out because their conviction was built before they bought, not after. Number five, smart money think in years and retailers think in minutes. That's why everybody's so scared of the price. Hey, when the price going up, what you want the price to go up tomorrow? You looking for a boost tomorrow? You looking for it in 5 minutes? That's not how smart money works. Smart money is looking at multi-year cycles, macro flows, liquidity conditions, utility adoption, long-term positioning, while retail is looking at the 5-minute candles, the hourly dips, the headlines, the influencers. And I'm not talking about when you're doing a swing trade and you're trying to make a profit. I'm talking about this is how retail act. Even if they got a bag that they intended at first on holding long term, but then they get emotional about it. So if you want to stop losing money, you need to stop thinking like someone trying to hit a lick and start thinking like someone building wealth. Wealth is not built in hype. Wealth is built in silence. Wealth is built in scary moments. And the people who understands that will always be ahead of the people who don't. Now, here's how you stop losing money. And it's a simple, powerful blueprint, right? And let me say again, this not financial advice. It's just clarity and wisdom that you can use to make better decisions no matter what asset you hold. Because winning in crypto is not about predicting the top or perfectly timing the bottom. It's about positioning yourself correctly and mastering your emotions. Now, I do want to say how you stop losing money is completely against what you've been doing and exactly what smart money is doing, which is building your conviction before you buy, not after. Stop letting the headlines influence your decision. You're being trained, not informed. Your conviction should come from utility and fundamentals and macro conditions. And again, a long-term plan, not the emotional temperature of the internet, right? Because headlines do not trade with you. Headlines use you, and then also make sure your dollar cost averaging into strength, not hype. Trying to catch the perfect bottom is how people lose money, and trying to time every wiggle is how people lose money. But consistent discipline accumulation into projects you actually understand, that is how you build wealth. And then again, think in years, not in minutes. When you zoom out and you understand the macro and the cycles and the utility, the short-term noise stop controlling you and you move with wisdom instead of emotion. And then really don't chase hype, chase value. The crowd doesn't care about your future. Algorithms don't care about your wealth. Influencers don't carry your financial responsibility. If everybody is screaming now is the time, that's usually the worst time to enter. If everybody is bored, quiet, negative, and emotionally checked out, that's usually the best time to position because smart money accumulates when retail is asleep. And then always make decisions from clarity, not panic. Your nervous system is very powerful, but it's not always right. If you feel anxious and your heart racing, and it's just a real weird energy when you're deciding to buy or sell, that's probably the worst time to make a financial decision. Pause, breathe, zoom out, return to your plan if you have one. Hopefully, you do have a game plan. And just understand that it's not going to be a good idea for you to make decisions when you're emotional. Your emotions will bankrupt you long before the market ever will. But when you move with intention and understanding, That's when you finally stop losing money and start building wealth the way professionals do. And it's easier to do that, number one, when you're long term, and number two, when you're educated. So here's what I want you to take away from this: the market is not your enemy, your emotions are. Fear will make you sell too early, greed will make you buy too late, headlines will pull you into the crowd, and impatience will rob you of the blessing you were meant to receive. But when you understand how the game is actually played, when you recognize the emotional traps, the media traps, and the timing traps, you stop moving like retail and you start moving like a strategist. You stop chasing the hype and you start positioning early. You stop reacting and you start thinking. You stop following noise and you start following wisdom, because listen, you can't build wealth by accident. You build it by understanding the system and mastering yourself inside of it. And that's exactly why I teach the way I do. Not to hype you, not to scare you, but to make sure you are not the one getting shaken out while smart money quietly accumulates your future. And if you want deeper guidance on this and you want clarity, accountability, mindset work, and a structured path to build your financial and personal life, that's exactly what I do in my coaching membership. And I'm upgrading everything in 2026 with a new curriculum, new structure, new tools, new support, because the season that we're entering into requires intelligence, calm, strategy, and community. If you want to join before the new upgrades, before the price increases, now is the perfect time. The link is in the description, and I do have a reward code for you down there. Listen, don't chase the headlines, chase wisdom. Don't follow the crowds, follow clarity. And as always, stay wise, stay wealthy, and I'll see you in the next video.